Yeah, what's up, guys? Why is it okay? Yeah, it's Kingsman Trading here, and I'm back with another video. And this video is officially sponsored by Mastering the Market 30 Days. So now, in this particular video, I'm going to be sharing with you all Fibonacci. Imagine if you don't know how to use Fibonacci in this 2025, you they really need to ask you question, honestly speaking. But anyways, for those of you that are still coming up, that are still learning, I'm going to be explaining to you all how to use Fibonacci retracement tool. First of all, now what's Fibonacci? I think Fibonacci retracement tool is mainly a tool that you can use to spot out high probability entries, whereby you can enter the market from um, via a premium and discount level. So using that Fibonacci retracement tool is going to highlight for you the major zone or the major level that price is most likely going to retrace to. And most people use Fibonacci retracement tool the long way. As the name implies, Fibonacci retracement tool is for retracement, not for counter trend trading. You using Fibonacci retracement tool for counter trend trading is you already setting yourself up for destruction. But anyways, when you're using Fibonacci retracement tool, please make sure it's always in line with the trend of the market and you're trying to catch a retracement to that major direction that market is pushing to. First of all, let me show you all my settings and I'm going to be explaining to you all how I use it. So this is my setting in case you want to copy it. And the way I customize it, hold on. I love it this way. I don't even know why the people that are creating all this stuff they added all those color, too many color, all this rainbow color. It's very, very, very irrelevant and very useless. Honestly, I don't know who uses Fibonacci with all those color. So if you want your own to be as clean and transparent as my own, all you could do is to just copy my settings and for the fact that you notice there is not you can't find any color in between these lines is because I came to this place and I used just one color and I picked just black color and then the background I reduced the opacity down to the last. So that's why my own is like this. So you can just pause the video, probably pause the video, copy the setup, and then you can get going. So first of all now, let me explain these zones to you. We all know the 50%, which is 0.5, is our retracement, our midpoint or consequent encroachment, which we can use it to identify our premium and our discount. Remember, we buy at premium, we buy at discount and sell at premium. Yeah, so buy at discount and sell at premium. So above this 0.5, this 0.5 is our 50% level that we're using percentage. This 0.5 is our premium zone. You want to sell at your premium zone and you want to buy at your discount level. So right now, let me give you an example, um, an illustration before we dive into the live chat example. So right here, now let's say we have a market that is moving like this. Okay, I don't know if this is a perfect example, but then let's just see where this falls into if we apply our Fibonacci retracement tool. So now, hold on, let me just arrange this in a way that you understand. Let's use this example. So basically, if you want to draw out your Fibonacci retracement tool, if you're trying to catch a buy setup, or let me say in an uptrend, you want to make sure you're drawing it out from the major low to the last high, which is the swing high. So you can mainly point it out from the swing low to the swing high. And this minus 0.27 is where price is most likely going to expand to. You understand? So the major Fibonacci is from this 1 to 0, 0 to 1, 1 to 0. You understand? So this point here now, this minus 0.7 is where price is most likely going to expand to. That's after taking your entry from this point. Let me say after taking your entry from this point, price retrace to this level, and then it's most likely going to expand. So this can be your target level. You can target wherever price is at this level. So now, what happened here? Let me explain it briefly. So this 0.61 level, 0.618 and 0.779 level can be considered as our golden zone or OTE level. Now OTE is optimum trade entry, and this is a zone whereby anytime price comes to this point, we can see a significant move, especially when you're trading in line with the market structure. We can see price going to expand most of the time that price usually get to this level. And now we have this point here. For you to add more confluence to this setup, you need to add other confluence together. You need to bring it down to make sure that your setup is not just based on Fibonacci retracement. You want to make sure there is presence of liquidity, price swap liquidity from that major POI before having that major movement to the upside. And then you just need to make sure there's break of structure and other criteria to make sure that you add all those confirmations to make your trade a very solid one. So right now, your liquidity, mind your liquidity there must always be a liquidity, and your liquidity must fall below the 50% level or the 0.5. Right here now, we can identify this as our inducement or structural liquidity. Can identify this as your liquidity, and then this is your POI. So basically, once you've marked out your Fibonacci retracement tool, any zone, you can just use your eyes to look for a particular POI that falls in between the 0.618 level and the 0.79 level. Sometimes it might be a breaker block, sometimes it might be in form of other block, mitigation block, or an order block. So once you've marked it out, you've pointed out your zone, you want to make sure that either there is a sweep of the previous low or a sweep of the previous candlestick to validate your buy setup, and there's also presence of liquidity. Most of the time, there might not be presence of liquidity and it might still hold. But then you adding all those things is going to increase the probability of that setup. So right here now, let me give you all an example on the live chat. Okay, I think we have one example right here on the US 30 Dow Jones Industrial. So now we have price is obviously advancing to the upside. We can see that price is in a bullish trend, and us now trying to sell this market is you looking for the market trouble, or you trying to give your own part of your donation to your broker. Anyways, right here now we have this high to be our swing high, and we have this low to be our swing low. So now if we want to draw out our Fibonacci retracement tool, we pick it out. It's from the low. Remember, you trying to draw it out on an uptrend, you point it out from the swing low to the swing high. Now from the swing low, you're going to see that it's 1, the starting digit is 1, and then your swing high, which is this point here now, is going to be 0. Don't forget, remember, this minus 0.27 is our expansion level or our target level. So right here now, what do we see? We can identify this unmitigated, in fact, this is an unmitigated POI, this unmitigated order block that is in between this 0.618 and 0.79. So we can draw it out. And also, to add to the confluence, we also have this inducement. Now, this retracement down to this level, it falls below our 0.5 or 50% retracement, which signal it as a valid liquidity. So Us now identifying this low or this liquidity or this inducement also add more confidence to the trade. So now if we want to be taking this trade, our entry is going to be at this order block. At this level, our target at the 0.27 and our stop loss should just be below the 0.79 level. Most of the times you can tell from your zone where to put your stop loss. But yeah, for this setup, our stop loss is very considerable to put it below this level. And as you can see, our Fib tool help us to identify a high probability zone that price in fact came into the zone, tap in, and then it advances from there. So I think this is one way of using Fibonacci retracement tool. You can go and backtest, study, and then add this to your trading arsenal. Well, thanks for watching and stay tuned for the next session of Mastering the Markets. I love you guys.